Welcome to Kalkine's educational series. The topic for the day is fundamental analysis. Today, let's understand what exactly constitutes fundamental analysis. Well, fundamental analysis is an amalgam of economic analysis, industry analysis, and company analysis. Now, let's understand them separately. Economic analysis. In this analysis, the investor seeks to evaluate microeconomic as well as macroeconomic factors. Within microeconomic factors, the emphasis is on behaviour of individuals and their spending decisions at given price levels. Consumer demand is also analysed, while microeconomic also includes study on firm, including costs, profits, competition. To understand behavior of individuals, understanding behavioral economics is paramount. Under macroeconomic study, the analysis of the trend in unemployment rates, growth rates, inflation, investment rates, savings rate, consumption, income, and other major macroeconomic variables that could impact the potential investment is undertaken. It also includes study of fiscal policies developed by the government as well as monetary policies by the central bank. And the analysis also extends to international trade, exchange rates, trade deficits, geopolitical environment, global economy, especially nations with close relations. Now coming to industry analysis. Under this analysis, the investor emphasizes on the trends in a particular industry and their impact on individual companies. Industry analysis allows to gain valuable insights about the industry and understand the position of an individual company compared to its peers. Michael Porter's 5 forces model is a widely used template to study an industry. These 5 forces include threat of new entrants, threat of established rivals, bargaining power of buyers, threat of substitutes, and bargaining power of sellers. Political, economic, socio-cultural, technological, legal, and environmental analysis is also widely used when evaluating an industry from an investment perspective. As the name suggests, this analysis is related to the study of all those areas that could affect the business. Investors also monitor the regulatory developments in an industry because it is crucial to know the rules of the game. Also, there remains a possibility that change to regulatory environment can have a material impact on companies. The third element of fundamental analysis is company analysis. In this analysis, the investor conducts a research on an individual company and emphasizes on specific details like business models, strength, competitive advantages, risks, opportunities, etc. It is important to know the cash generation intensity of the business as well as how the company makes profit or what are margins of the business. What are the products or services of the company and who are the customers of the business? Further, it also includes research on the quantitative aspects of the company, including net income, operating expenses, assets, debt, liabilities, cash flows, earnings, as well as growth history of the business. Let's understand some basic valuation techniques. The first one being dividend yield. Dividend yield is one of the basic valuation techniques to express in percentages the amount of dividends paid by a company in a given annual year relative to its current price. Second one is the earning yield. Expressed in a percentage, it is the earnings of a company in an annual year in relative to its current price. Earnings on net income of the business is the amount of money the business has made as per accounting principles, since actual cash realized could be otherwise. Third factor is price to earnings ratio or the PE ratio. This factor is one of the widely used valuation techniques to indicate the premium given by the market to the company based on its earning potential. It is calculated as the current price of the stock or earnings per share. Price to book ratio. The PB ratio is calculated by dividing the price of the stock by the book value per share of the company. It is primarily used to evaluate stocks based on the premium over the book value or discount over the book value. Good fundamental analysis entails reading and synthesizing a lot of material and using a balanced approach to come to an investment decision. Seasoned investors read a lot of material including annual reports, industry reports, newspapers, business journals, conference call transcripts, to name a few. Having a circle of competence is essential, and for building a solid circle of competence, one should also consider learning ideas from other domains to become a rounded thinker, which is essential for good long-term fundamental analysis. Well, that's all from us today. For more definitions and information, do visit our website kalkinemedia.com and do subscribe to our YouTube channel.